Okay, so fractals are showing levels of support and resistance, and it also shows market structure as well. How fractals form, and then going in closer on the fractals. Fractals form every roughly 3 to 5 candles. So starting from here, you can count 1, 2, 3, 4, and 5. So this after this candle closes, this fractal should appear here. All right. So when you see a fractal form, it's showing you a level of resistance or support. So in this case, this would be resistance, or you could call it a level, this would be a bullish fractal since it's pointing upward. Anything that's pointing downward is a bearish fractal. All right. So it measures out the high and the low, and then it determines if it's going to be a bullish fractal or a bearish fractal. All right. So if we count it from this point, 1, 2, 3, 4, 5, this fractal would come about, and it will give you a bearish fractal at this point. So how do fractals play? If you see a bullish or bearish fractal, what you want to look out for is if you see the market or the price structure breaks at a bullish fractal, you expect the market to go up. If we break a bearish fractal, and we didn't here, expect the market to move lower. All right. So that's one way to look at fractals. Okay. So here in this situation, we see that we had a fractal breakout. You see, the market went higher, and then markets continue to go higher. So this was saying that this trend was a pretty strong trend to the upside. So another way to use fractals is by zoning them. And what I mean by zoning a fractal is, let me get my tool out for you so you can see this, because this is going to be important. Let me see. You get that rectangle box out here. Here we go. So what you do when you are boxing a fractal zone, what you want to do is put it from the wick to the body of the candle. So something like this is how you get the zone of a fractal. All right. And I'll go more into detail on this because this is actually a trading strategy that, is very effective when using it in the market. So right here, we see that the fractal broke, fractal got violated here at this price on gold. It was above 1288. So once it broke above that fractal level, you see the market went higher. So when you're using fractals, what you want to see is if the market's going to come back down and retest that fractal, because usually when you get a fractal breakout, and this is usually, not all the time, but usually when you get a fractal breakout, market tends to go up, come back, retest it, and then continue or break lower from that point. But in this case, it didn't come back. So this was a really strong movement in the market. All right. Another example. So if you're going to trade, let's say if the trade is already taken off and it's going to the upside, all right, you want to get in on the trade. You're trying to find an opportunity to get in this market. So what you want to look for is a fractal bounce or a fractal break. A fractal bounce will be something like this. The market's coming back. So we see this, we identify this fractal level or this one, depending on what you want to look at. But you could extend it higher if you want, or you could keep it at this one. But we're going to focus on this one right here. So what you want to see for this market, you want to see if we're going to break at this point. You see here that we did break here and went higher, but look what happened. We didn't really close above it. We made a wick here, and we didn't close above it. So this was a false read here. This wick broke above, but it wasn't a clean break here. It wicked back down to these levels down here. So what you want to see the first candle break out. So the first candle that broke out was this one right here. You could argue this one, but no, even still, you see the wick here. It wicked down and it closed below this fractal high. So this was the candle that you would be focusing on to take your trade higher, because this was the true fractal breakout, and you see the result of the market moving higher here. All right. So that's one way you can look at the market, testing or using fractals. Another way here, when this market formed a fractal at this level, see how we we made a support here. And this is why I always tell people, if you could find these, understand the structure of the fractals, you'll understand that this is a level of support when the fractals form. So if you extend this further out or into the future, if price ever comes back to this point, you know that you could look at this for another time. All right. And notice here that these fractals lined up. Okay. So this was saying that this was a good level of support here. It held pretty strong. It used to be resistance back here, but now it's resistance was claimed as support over here. So you got to understand how it flipped over. If you could understand this concept by itself, you'll understand how to trade the market, because this happens all the time, and you could trade the market literally 24/7 just by understanding fractal structure. All right. So once we found out that we held here as support, we identified it was support here. The market moved higher. All right. And then you see it started to range. So another thing, when you see fractals are getting closer together like this, it's starting to cluster up like this. This is how you could identify a ranging market before it happens. All right. So once you see something like this, these three lined up like this, automatically do this, automatically put a line through here. All right. And then look for the lowest one and put a line here. Notice how the market is in a range here. All right. You see how we caught we caught the range early before it even happened. So you could gauge the market before it even happens by understanding the fractal structure. All right. So once you understand the fractal structure here, you see that we had made a range before it happened. So let's rewind. Let's go back to this point right here. Okay. You see 1, 2, 3 right here. These are too close. These are too close, because what you really want to see when you see fractals get cluttered like this, you don't want to see this. This is too close together. What you want to see is that far apart. You want to see this. Fractals getting further and further apart. Look how far apart this one is to compare to this one and this one. You see, if you pay attention to this line here, how they're further apart from one another, you'll understand that the structure is bullish. All right. So when you start to see them cluster like this, be a little weary of that. All right. And you're probably wondering why not down here, because look what happened. This one formed a little higher. So this is still saying that the market's strong, because if you put it right here, it's formed a little higher. So at this point, this market's still bullish. But right here, since we did get a close higher than this point, this is saying that this market is consolidating here. And this is why we box it in. So at this point, you should know that the market's going to consolidate. Now you have a trading range in this market. So if we were to play this, you see how the market stayed within this box, or within these two lines. So between the price of 1383 and 1434, or no, 1339, you see that the market stayed pretty much consolidating here, just by understanding this simple simple strategy or simple observation skill in the market. So once you identify that, see here how we're still in this. We did have a break here, so buyers may have entered here, but if you traded that would have been a loss, depending on where your stop loss was. But overall, it did end up breaking back to the upside. And this was saying that momentum was still starting to favor going higher. And you could also use fractals to draw your trend lines as well. So from this point to this point, you could draw like that, and even push it out further like this. So fractals are a good tool to use for drawing trend lines, identifying support and resistance, identifying a level where you want to get back in on a trade to see for it to bounce or break at. And it's pretty simple. Then you see here, the market just took off. All right. Any questions so far? I know it's a lot being thrown at you at one time, but just like fractals, once you get like a better understanding of fractals, the market, becomes, pretty much easier to read and easier to understand just by understanding this here. So any questions so far?
Oh, uh, uh, so far so good. My question will be related to the order blocks.
Okay.
I saw on another video how you use these fractals to identify order blocks, and when you see this formation, when they are clustered, and you see there's a pattern for where where you can where the price is not going anywhere, but it's consolidating.
Right.
Do we look for order blocks in this area, or order blocks are for another strategy?
Order blocks is a completely new other strategy. Order blocks, you don't need fractals for order block, but usually at a order block, there does appear fractals. And what I'll show you what an order block is. Order blocks are simply areas where you see price action in it. All right. So what you want to how you want to identify an order block is by looking at two candles. So you want to see one candle is really small, and then you want to see a bullish or bearish engulfing candle. So in this instance, let me take these off. So in this instance here, there's many order blocks in this area, which is why it consolidated the way it did. But if we're looking at a bigger order block, this was the overall order block at this on this market. So how to identify it? One, this was the first candle to pay attention to. And then two, this was the second candle because this was a bullish engulfing candle. All right. So how you want to draw the order block, you want to box in really from the high of the candle, whether it's a wick or not a wick, or the body of the candle. So you want to get the high to the low of that candle and box it in and move it all the way to your left, or to your right. And then you'll see that you have an area where you could trade the market at now. You see how the market respected this order block? Look how the market acted in this order block. This whole zone, this whole green zone here, the market respected this order block. So you could look for bullish trades using this order block. So here you could have taken the trade. Here you could have taken a trade. Here and here. Really anywhere in this order block, you could have taken a trade to the upside. So order blocks are used to identify momentum of the market and also used to see where institutional traders are getting into the market. Not a lot of people understand this because a lot of people don't understand institutional trading. If you understand institutional trading mindsets, this is how they look at the market. So another example of this, now let me see if I can find one up here. Let's see. Here's one right here. It's unique, but this one is smaller than the other. So you have a smaller candle followed by a bullish engulfing candle. So you notice how price was responding here. It didn't really want to come back and touch here. It relatively stayed above. It really never really got close to it. It stayed above pretty much on this market. So you see how this order block responded to the market. Now you would keep it on here just in case the price does come back to this level. All right. So let's see if it does. Let's see. You see how close it's getting? Let's push it out some more. So you see how now it touched this area? You see how now, and look, we already had it drawn out way back here. So now the question that we're looking for in this area is, what is the market going to do here? So when you see an order block, we're expecting, this is our expectations to go higher here. All right. That's our expectations for a trade when looking at this order block. But we also have to realize that, when we see this, it could also break below here. So what we're looking for two things, we could look for the break to the upside or the break to the downside. So that's what we're going to play here. So let's see what happens. We got that break to the upside, and we also have price action, a morning star formation. So we would look to go to the upside from this point. Now, this is when it could get complicated because your first target here, if you're trading this, would be this area because this is an order block right here. All right. See how this order block formed? It had a regular candle followed by a bearish engulfing candle, and then you see what happened there. And you see you could draw this as an order block too, and you could move this higher because this is the candle that you will pay attention to. But we're not going to do that. We're going to keep it simple, focus on this order block from the past that held at this level here. So this is what we're expecting from this point to this point. All right, so we play it. So you see how we got inside this order block? So from this point, we could take our trade. You could take your profit here if you want to, or you could keep it going. Just make sure you manage your trade. And let's keep on watching. So it's still ranging into here. So let's move this outward. And notice one thing else too that's happening. Look what's happening. This is why it's good to understand fractals as well. Look at what's going on. These fractals are getting close. Remember what I said about these fractals getting close? We're going to start ranging in between these two order blocks. So we do this. We're still in here. And now look where we're at. We're at the low end of this order block. All right. So now we're paying attention to see if we're going to get this situation now. If we're going to break to the downside, oops. If we're going to break to the downside or if we're going to move back higher. So now that's the question that we have at this point. So if we were to look at this, we will say maybe this most likely to go down because momentum, well, I can't really say here because CVO is not giving a good indication. But here is saying market's looking bearish at this support and at this order block. So we would have to wait for a break underneath or for some type of divergence or in some indication here that the market could go higher, but we don't have that yet. So what we would want to see, if we're going to go bullish, wait for a bullish candle, and then we'll take that trade up. If we get a break to the downside, then we expect some downside action. So we're still holding here. Okay, so there's price action right here. There's a dragonfly doji candle. So what you could do, if you are a aggressive trader, you could take the trade here at the break above this point. So if price breaks above here, you would go long. All right. If price doesn't break above here, then you would go short. But you want the market to trigger you in. You don't want to let the market take you in. So the market price closed down here. So if the market comes up to this point right here, if the market comes up to this point, the market's got to trigger you in. So you don't have to worry about the trade because you already have it set up to where if it triggers you in, you take the trade as it triggers you in. You're not entering the trade because you feel it's going to go your way. You're entering the trade because it triggered you in. So we're going to wait and see if the market triggers us in or not. If it doesn't trigger us in, then we don't win or we don't lose. There's no loss here. All right. So let's play and see what happens. So now we're triggered in the trade right there. All right. And we're now in profit in this trade. All right. So let's extend this out because we're still ranging in here. So one thing we know, we could, if we create a fractal right here, most likely this market may end up going lower, but we'll see what happens. Okay. And see what happens. Let's see. We're going to wait it out. Let's wait it out. Let's extend this. Extend this order block as well. Because it still hasn't knocked us out of this market. We're still in this trade technically because it hasn't hit our stop loss. So we're still here. Let's continue to drag this out. Play it some more. Still in the trade. And sometimes you might get trades like this, but notice what's happening here. We're starting to range again. So now either what's going to happen, we're going to get accumulation here or distribution. So two things is going to happen, and it's going to be one of these scenarios. It's either going to move like this, come down. Oops, I don't like that tool. Let me move that tool. Where's that tool? Oh man, they changed the tool so much on this thing. Okay, well, let me just show you this. Here it is right here. So one thing that's going to happen, we're going to come down like this, move sideways for a bit, and then come up here. That's scenario one. Scenario two is we come down, range here, and then break lower. So that'll be scenario two. So let's see what happens, because one of those two scenarios is going to happen. It's just figuring out and determining which one is going to be. We're still in the trade though. We haven't got stopped out yet, so we're still good. Sometimes you'll get in the trade too early because you don't know what the market's going to do. So let's see. And then look what I told you. It did exactly the scenario that I said. One of those two scenarios is going to happen. The thing about trading is all these scenarios is going. One of these scenarios is going to happen. It's just determining which one is going to happen. That's why it's like chess. When you, I don't know if you play chess or not, but when you set somebody up a certain way, you're going to get a certain outcome. All right. And depending on that outcome is going to dictate the winner of the game. So like I said it's going to come down, either range here and then move up, and it did, or it's going to come down, move this way, and then down. And those are the only scenarios that could happen in this situation. It's just you have to be positioned in the right direction for the right direction. All right. So you see what happened here, and I'm pretty sure if we use some other strategies to combine with this, we could have figured out what was going to happen here. All right. So we saw.
Yes, yeah, and
that's
the since the fractals are the lower fractals are getting higher. Here, yes. Is that an indication that the market can go up, or it's just coincidence?
Not always, because there's some situations where right here this can still break to the downside, because if you get a break underneath the fractal, it'll be a bearish breakout, a bearish fractal break. All right. That's why, seeing that's good and all, but you have to also remember you're inside an order block. So anything could happen inside an order block. But this going up higher, there has to be another reason why this is going higher. That's why I said if we're looking at this, let's say if we were looking at it with like one of these indicators here, we want to see if there's divergence building up on this chart. So that's another way that we could get in on this type of trade to add more confluence to why we want to get into this scenario. But if we went to like the 4 hour, I'm not trying to make this too complicated. We went to, let me mark this up on the 4 hour as well, just so we could make sure that we get this completely, because there are some times where even though the fractals are moving higher, the market still may break below it, and then you'll have some questions like what happened with the market. That's how the market does. So that's why you want to keep it as simple as possible. So if we come down here, this was the area that we were looking at, and if we look here, let's see if we can see if there's any divergence to support us. So there actually is some divergence here, and I'll explain it right here. If you look at this market from this point, this market is really honestly flat, despite this coming lower, because you really don't count wicks. But even if, let's say if you did count wicks, that's fine. What you see here, this on the CVO is actually moving higher. And you could even stretch it out to this way. It's still moving higher. But from this point, you see this bullish divergence, and this is why the market played out the way it did. So you have to have a lot of tools at your disposal to be more effective in the market. This is why a lot of people don't succeed in trading, because they don't have enough tools, or they're not equipped with enough tools to, conquer the market. So that's why when you start to see, you start to see certain things, traders take their time to figure out what's really being said in the market. So when you see that, that's when the market, gets interesting. But yeah, you see one of those scenarios played out, right? I told you to take the trade here. Our stop loss was here. You see it never hit our stop loss. You stay in this trade until it takes you out of the market. All right. Or unless you just, get tired of being in the trade, then you could get out. Because you see how many days it took for the market to take off from this point. Sometimes you have to be patient and sit in your trade, and that's okay. But here we call the trade from this candle, but really on the next day it triggered. So it took us, that's a long time. It took us 33 days for this trade to be successful, but you see it went straight to our target point at this order block. And if you took this trade was on gold. So the market went up about how many pips? How many pips is that? 542 points. So that's 542 points in the market for gold for 33 days. So if you took that trade, then that's a good trade. But that's how you would look at this. All right. I know it's a lot, but this is how you use it. And if you have any questions, I'm always going to be able to answer them. So go ahead and ask if you have anything.
I guess my next question is, how do you use this with the clouds? And okay, when you get mixed signals, that sometimes confuse. It's confusing to read where the market seems to go.
Right. All right. So if you're going to trade this with the clouds, the best thing you want to do, keep it as simple as possible. If you are above the clouds and your order block is above the cloud, look for the market to go up. If you're under the cloud and if you have an order block under the cloud, look to go down. So if we look at this area, maybe when we look at the chart, I'm thinking when I add Ichimoku on here, I'm thinking the cloud, this price is going to be either above the cloud or slightly under, but we're going to see in a second. So here, yes, so you see how we're slightly underneath the cloud here at this order block. So this is how you combine this strategy, all right? And I know this is also breaking the Ichimoku rules, but sometimes you have to break the Ichimoku rules to get in on certain trades. But that's another explanation for another day. So if you're trading here, let me take this off for a moment because we already see that it hit the target point. But if you look here, see what happened here. All right. If you this is why I always tell everybody, you have to understand the Ichimoku basics before you start combining it with other strategies, because Ichimoku is very powerful on its own. But I think the complication gets when people start trying to add, other strategies into Ichimoku because they don't have the basics down. So here for trading this situation, we already identified our order block here, correct? So we know that if price comes back down to here, we're automatically looking to see the market go up. That's our first thought. But if you're trading Ichimoku rules, since it's underneath the cloud here, you're thinking bearish, right? But since we're looking at this first, we looked at this first. So this is what, let me explain it like this. First, pretend this never happened. Finally, price got here, we looked to go long. Price came back down to here, we're looking to go long again because we're looking at it as an order block. When you look at it as an order block first, you're thinking bullish, all right? But when you put it on Ichimoku, you're thinking bearish here. But look here, this is why you would want to go bullish here on Ichimoku. One thing right here. Do you know what this is right here? Oops, let me get rid of that. Let me zoom in so you can see it. All right. Right, and I'm going to use this tool. What is this right here? Let me take the candles off and let me take this stuff off. What is this right here?
Golden cross.
Yeah, and what is it? What is it, a bearish cross or a bullish cross?
Bullish.
Yeah, it's a bullish cross. So we have a bullish cross inside of the order block, right? So since we have a bullish crossover inside of the order block, if you were patient enough to, wait here, because sometimes, you have to be patient because sometimes we get in a trade early and you're in this clutter right here, which it's not the most favorable thing to be in, but, sometimes that happens and you just have to deal with it. But right here, we have a bullish crossover. And if by Ichimoku rules, if you're trading just the crossover, because you trade the direction of the crossover until, the crossover You know, the crossover is violated. So if a crossover was violated, you'll see these candles underneath the blue line. But you see how we had our crossover, price broke above the red line, and it stayed above the red line. So you could have entered in long all the way from this point. So you would have got in the trade later than over here, but that's fine because the point is you want to trade with accuracy. You don't always have to be, you know, on the dot, on the spot on like every single time. You just have to trade with accuracy when it comes to your entry points. That's why, you know, people, are you on Twitter?
Yes.
Okay, so you hear people say timing the market versus time in the market. You know, that silly saying that, you know, people say on Twitter. Well, here's the thing about that. You could time the market by waiting. The more patient you are, you could time the market for entry, boom, and catch the trade from this point. And this was the bullish crossover that we had to take the trade. And if we were looking at the 4-hour time frame, we already identified we should go long here anyway based off the 4-hour because we had divergence. So we could have actually gotten in a lot sooner than here and just rolled the trade and kept the trade going. So it comes down to what strategies are you trying to combine with Ichimoku and taking your time to be patient with it. That's why for myself, when I look at a chart, I have to really, you know, sit down and wait so I could understand what the market's really saying to me, so I could see, you know, not make the wrong choices. And you know, that's why when I call out trades for you guys, they usually hit. Not all of them hit because I might have missed the detail and it might have cost me, but usually those trades pretty much hit. There was a day, I think, like not too long ago, I think it was last week, I was saying buy XRP, Bitcoin, Ethereum, Tezos, and Solana at the same time. They all went up at the same time. So it's pretty much 5 out of 5 went up at the same exact time, just from understanding different structure of the market and order blocks and fractals. So yes, this is how you would use the order block to trade Ichimoku and with the fractals. You just have to be confident in what you're seeing. Like right here, it would have been a little scary because you're trading into the cloud, but you see the momentum we broke through the cloud, and that was even another confirmation to go long even here. So that being said,
So,
that's yeah. Go
so,
ahead.
so, if I get it correctly, these these fractals, which are forming very near each one another.
Yeah.
Yeah. They're telling me there's consolidation.
Correct.
And since they are in an order block, inside an order block, I can expect both. Either the market goes up or down.
Correct.
And then Ichimoku tells me, and the bullish cross or bearish, whatever happens, can tell me what to expect, or what's the direction I have to plan to trade.
Yes, because the crossover is the direction you want to trade in. So up here when we had let me show you this. Let me take these off. Let me take the candles off as well. Ooh, excuse me. So back here, and this is why you have to be patient with Ichimoku, because sometimes you'll get multiple crossovers like this. You have multiple crossovers. So we had a bullish crossover right here, but immediately we had a bearish crossover right after. When you get that, that's also saying that we're also in a consolidating market here. So market consolidated here. And I'm not even looking at the candles. I could tell what's going on just by reading Ichimoku, but I have to be more patient because Ichimoku forces you to be patient so you can capture the real direction of the market. So it was saying bullish here, but we're in a consolidation phase. But then it gave us a bearish signal right here. So if we put the candles back on, put the candles back on real quick. Notice what the direction of the market was going in. So you could have caught the trade from this point down. And then if we put the order block back on, you could have traded it back into this order block and take your profit here. All right. So that's how you will look at Ichimoku. You want to trade the direction of the crossover. Don't worry about the cloud all the time because sometimes the cloud will, sometimes the cloud will distract you from what direction you want to trade. But overall, you want to trade the direction of the crossover before, confirm the crossover direction. Now, if it gives you signs like mixed signs, then don't take it or, just wait longer. But you want to be at the point where you're waiting on the scenario to play out. And in this case, it played out in our favor. Back here, it would have been a little more challenging to catch this on the daily time frame. This would have actually been a little easier on catching this on the 4 hour or the hour time frame over here, because based on the daily, two things that I see. We had this gigantic bearish engulfing candle, and this is also an order block right here. So we could actually move this over. An order block formed right here, and then you see the market, went down. So you could have entered in short here, but that would have to come down to coming to the 4 hour time frame to confirm this, or the hour, because this would have been harder catching it on the daily time frame, just from what it looks like on my chart and understanding what's going on here. But right now, seeing what I'm seeing, you see this order block here. And also another thing, I want to say this before we move on. You could have overlapping order blocks as well, like something like this. So there's an order block here and then right there. So that does happen, but if you see that, just trade the direction of the order block. Just have one order block on your chart so you don't get too, stuck on the order blocks, because it can get confusing if you're adding so many order blocks on your chart. But it is nice to have it. It is nice to know where they're at, but take a mental note on those. All right. But yeah, any more questions? I got you.
Well, yes. Back to the fractals.
Yes.
Yes. Does the frequency of fractals clustering going down or up has any meaningful reading on the charts?
Do they have a meaningful reading?
If I see too many more down fractals than up, is that a sign of a bear?
So you're saying like right here, how there's more bearish fractals than bullish fractals here?
Yes.
So no, this means absolutely nothing, because if you see more bearish fractals, I would look into that. But from my knowledge of fractals, if you see fractals like right here, this is saying there's support here. So I do see that there's a lot of support here. But at the same time, that could also mean nothing, because it doesn't mean anything until a fractal is broken. So until price breaks above or below a fractal, that means absolutely nothing. So let me see if I can find an example, because let's see. So right here, we had more bullish fractals here, right? And then there was less bearish fractals here, but the market still pushed higher. There's more bearish fractals here and less bullish fractals here, but the market still pushed higher. So yeah, that doesn't really mean too much. The only thing you're concerned about when it comes to fractals is the breakout of the fractal or the retest of the fractal. All right. So that's really it when it comes to fractals. There's not much more to say about the fractal. I don't know how people trade it on Twitter, because I've seen some weird stuff and I'm like, that's not how you use fractals. But unless they just make stuff up and make it work, I don't understand, because I've seen some weird stuff. But from what I'm showing you, this is essentially how fractals were designed to be used. Any questions on that?
Okay. Just to make it clear, to make it for myself. Yes. So fractals mark either a support, or can we call it I'm going back. They mark a support or resistance, and what I'm looking when I'm looking at the chart, what I'm looking for is that a fractal is uh, how do you call it? Break the fractal? No, you call it.
Fractal break.
Yeah, I'm looking for price breaking beyond the fractals, either
Yes.
up or down.
Yes.
And that's a sign. That's another sign for the direction of the market.
Yes.
Okay.
And
Okay.
let me explain this as well, because the direction could be temporary or it could be long term. And that's why when you trade the market, you always want to draw up your levels of support and resistance. And the crazy thing about it, there's so many, but you want to identify your levels of support and resistance, because it could break a fractal and continue lower or higher, but it could be for a short period of time or a long or extended period of time. For instance, let me see. I really don't want to remove all this, but I'm gonna clean up this chart so I can make a point. So let me take everything off. So for instance, let me show you this. So right here, we see that the market broke these fractals, right? So we put a line here, we put a line here at all these fractals. I'm gonna just do a few more like right here. So notice how the price was breaking these fractals. We broke this fractal coming down, we broke this fractal, we broke pretty much all these fractals. But you see this last one here that it broke down here, this line down here. Let me mark this. We see that it broke here, but look, it didn't last too long, right? Versus up here, and it lasted longer. All right. So this fractal and the one over here to our left, notice the duration of how long these lasted. So that's why you have to say what is going on in this area. And notice, and then going back to it, let me go back. Notice this was a order block. That's why it didn't go down as far as it could have. And then going down to a smaller time frame, we know that there was bullish divergence here. So this is an indication that we have to be patient and wait. Trading is all about being patient, waiting. Oh, excuse me. And seeing what direction the market is trying to move in, the direction that the market is trying to speak on. All right. And it does get complicated because we don't understand what the market's always got to do at all times. But just being patient and waiting on certain things in the market lets us know that we have a better, jump on the market before others do, because we can read the charts much faster and much easier than they can. So if you have certain tools at your disposal, oh yeah, you're gonna be better off than most people that are even invested or trading the market. So understanding fractals, order blocks, and mixing it with Ichimoku is almost like robbery sometimes. But I hope this is making sense. I might do another video and teaching on this, but this is the easiest way to break it down.
Yes, it's making total sense. One, I don't want to say final question, but when we are looking at a chart like this one, that is a daily chart. Am I correct? Yes.
Yes.
Yes. Going to lower time frequencies. We look for different patterns in fractals, or do we keep these order blocks and fractals, and when we move to a lower time frame, what we're looking for is more the timing?
Gotcha. Okay, so let me explain that now because I'm gonna make it clearer. All right, so we're gonna go to a lower time frame, and right here where we're currently at, you would look to go, you would think, okay, so let's say we take Ichimoku off. So if we're just trading naked charts, you're thinking going short from this order block up here. So I might actually color code it. So I'm gonna make this like red. That's an ugly red. Okay, that's a little. We'll go with the ugly red. So let's say right here we're thinking about going short. All right, because notice how the market responded at this order block. You see here came down, here came down, here came down. So we're expecting something like this, right? But we don't have an indication that that will happen. So we want to say here at this area, price is going to do up, go break through the order block, or break, bounce off the order block to the downside. Now, if you're using like a multiple time frame, so I'm just do without Ichimoku first, and then I'll go to Ichimoku. So here, when we look at it, same thing, just a 4-hour time frame. We're trying to figure out what is the most likely scenario. You see here we have a bearish engulfing candle, so maybe we might start pushing back down. Is there any divergence here? Yeah, there's divergence here. So we have price going higher while this is moving lower. And RCI also gave us a short signal. So if we're trading, just naked charts, this is our strategy, trading naked. So we want the market to trigger us in. Stop loss will be here. And we'll probably look at this area first for taking profit, because we'll look for a fractal bounce at this level. So this is the area. Actually, no, I'm going to do this. Make this easier. I'm going to just zone it. So this is going to be going back to that fractal zoning that I was talking about. Make that a fractal zone. Bring that over. So we will look to go long probably here and see what happens. But let's see if the market even gives us this, this setup, or if it even plays out like this, because it could go down a little bit and then move higher, or it could just, just take off. But we don't know. We're just, based off our analysis, we're going to look at the market like this. And then also we have support right here in 2 spots. We have 2 fractals that we have to break. So price could come here, bounce to the upside, or come here and bounce, come halfway, or come all the way. So we have areas that we could look at. So let's continue. Let's go ahead and see what the market gives us. So you see, it never triggered us in. So we never won or lost a trade. We just missed out. So let's see. And then the market just continues to take off. So sometimes you don't know what's going to happen here. But let's take a look at it with Ichimoku. So let's go back. Let's go back to the same spot, same exact scenario. So let's see with Ichimoku, because with Ichimoku, this might eliminate us losing this trade, because we know Ichimoku is a trend indicator or a trend system. I don't like calling it indicator. I like calling it a system. But naked chart trading, we're thinking short here. Ichimoku, we're thinking long, because everything's bullish. You got a golden cross, Chica spins above price. Everything's screaming bullish on Ichimoku here. All right. Despite there being divergence, bearish, but divergence, everything is pretty much bullish here. So one thing we want to see if the price is going to bounce off the red line. If it bounces off the red line, we'll take the trade. So we're not in the trade just yet. Still not in the trade yet. Still not in the trade. Actually, let me see that. Let me zoom in on that one. Actually, you know what? We actually could enter this trade long, because we could have actually entered in long right here, but I couldn't see that. And then also another indication on Ichimoku why we could probably go bullish is because span A and span B, the Kijun are all going up. So really with Ichimoku, we probably could have actually got in this trade without looking at the chart too much, or looking at the naked charts too much. So here would actually be our trade. And then if we go back to the daily, notice what's happening here on Ichimoku. A is up, B is up, and then both our red and blue line are pointing up. So this is saying the momentum's good for this trade. So really, if we were trading with Ichimoku, we wouldn't have this issue. If we were trading naked charts, we would expect downside action. So this is why you have to, be clear on what direction you are looking to trade in based off the higher time frame, and then make your move on the lower time frame. So it ended up playing like this. and that thing really took off. So that thing really took off. So here, if you got in the trade, you got made like 257 points, and if you got in and held it up to this point, it was 664 points. And I think and price ended up going higher because of we know where price is currently at now. But if you're trading Ichimoku, yeah, you would have not got caught up with the short here. So this is why I like Ichimoku. And another thing, let's go back one more time, and I want to show you idea, one of these, not an idea, but I want to show you a secret on how not to get caught up in something like that. So it involves the CVO. So I'm going to use the CVO. Let me do this as well. So notice how we would think short here. But look here, I want to show you something on CVO. So if price breaks, or if CVO volume breaks above this level, think about going long here. All right. So that's where you want to go long if it breaks above here. So if we look at the CVO, you might get in late, but let's see. Oh, actually, no, let me go back one candle right there. See right there? You see how it broke above? That's your bullish engulfing candle to go long. So you really, if you waited long enough, you could have entered in here for your trade. And let's see. You're triggered in, and now you're in profit. See how that played out? So that's one secret how to, avoid, not getting, shooken out of the market, is by paying attention to this little detail. Little detail like that will help your trading. But, not a lot of people know that. But this is why I always focus on just basic things. Don't keep it simple as possible. Don't complicate your trading. The key to trading is just be observant of certain things. If you're starting to observe certain patterns or movements, when you get a certain indication, then you know where the market's going. And look what happened here. And if you got in at that point, you made 219 points in the market just from this point. So, and this was the more conservative route too. This wasn't aggressive. This was more conservative here. All right. Any other questions?
Just looking at this chart, like right now, you have the previous rally. You have two fractals.
Mm-hmm.
I see it. It seems like on the same candle there is one fractal going up and one down.
You talk about this and this?
No, way earlier.
You talk about over here.
No, earlier.
How much earlier are you talking?
At the beginning of the rally.
Oh, you talk about down in here.
Yes, yes.
Okay, got you. What about them?
Those two fractals. I mean, there's one candle with two fractals. How do I read it?
Oh, you talk about these two like this.
Yes.
Okay, that means nothing. Don't pay attention to that. You trade the same exact way. That I don't even honestly. You want to know? Well, I don't even know what this means, to be honest, because from what I was taught, they tell me it doesn't mean nothing. You just trade them like it's just a bullish and bearish fractal. That's just what I've been taught, because it happened back here too, from what I see. And if it broke above, you take it up. If it broke below, you take it low. But yes, same exact thing here. Okay. There's no difference. Yeah, because I was like, okay, I understand what you mean. Because I had that same question too when I first seen fractals. Like, what's this mean? And yeah, it means nothing. At least that's what I've been taught. It means nothing.
So the what's important is when the price breaks above or below a fractals. That's what's giving me the signal.
Correct.
Okay, understood.
Oh, and one more thing, it has to close. It can't be a wick. If it's a wick closed underneath or above, it doesn't count. Now, if it is a body candle close, then yes, that does count. And make sure if it's at supported resistance, because if it's at a support level, most likely it's gonna not go too far and then continue higher. So you'll have to re-strategize your trade from that point.
Okay.
Like
Okay.
like for
And
instance, you see back here. Let me go do this. So we're gonna rewind to this point, and this is gonna be my last thing for the day. This is what I'm gonna say here. Because notice here, it broke below this fractal, right? You see how it broke below, but look, it went right into support. So this wasn't really a good setup here because I don't think you got your bearish crossover. Nope, you didn't get a bearish cross. You had a bullish crossover. So you had a bearish then bullish. So this was consolidation here. You had a bearish, bullish, then almost bearish crossover. Let me see. Let me play one more. It never crossed over again. So this ended up getting bullish. Yep, it ended up getting bullish here. So yeah, that was crazy. But yes, you may get situations like that where that may happen, and then the market just starts taking off. But notice here how the price responded, and then also pay attention to this green line too if you're trading Ichimoku, because this is above price, which usually says momentum's bullish. All right, and you see how the market took off. So that's one way to look at this market. I know it is a little bit complicated, but hey, um, that's what this is how you get familiar with reading these charts by understanding fractals and order blocks and how to combine it with Ichimoku more effectively and more efficiently. All right. So I think I covered, yeah, pretty much covered everything here on um, on the order blocks and on the fractals, and then combining it with Ichimoku. I think we're pretty solid here. Um, if you also have any questions in the future, you're in the student Discord, right?
yes,
Okay,
just recently.
so if you go to the ask a question section, just leave a question in there, and I can make a quick video about it, or do go over it in the in a class session. But I might do recordings and just make a videos on as well. But yeah, that's pretty much it on fractals. I might, like I said, I might go over it another time and just do a PowerPoint on it. So it could be, so you could get like a visual reading on it and then read like what it's saying and then go over on that. But yeah, pretty much that's it for fractals. Fractals is not too complicated.
Thanks, man. Really, really helpful. I'm learning the system, so still seeing all your videos once at a time.
Awesome. So I'm gonna go ahead and stop the recording, and then I'm gonna go ahead and close this out. But yeah, I'm glad that you are getting all the knowledge and the information that you need. One-on-one sessions are good like this because it helps you, understand, and I could put more into you because it's harder to have multiple people in class because there's different questions, and sometimes I can't focus on like 1,000 people at one time or however many people are in the class. But situations like this is good to ask all the questions you need at that time. So I appreciate you joining me today, and yeah, if we need to cover this again, I'll probably cover it again in a PowerPoint or make a PowerPoint for it.